let's take a look at some charts and information on Maker for Brave New Coin. So Maker is a DAO where you can send initially ETH, but now many other things to borrow against and mint a stablecoin called DAI, also referred to as Psi, or whichever sort of stablecoin moniker maybe you want to give it at the time. Multi-collateral, single collateral. It's gotten extremely complex over the past few months as far as issuance is concerned. There's a burning mechanic now that I'll talk about as far as the Maker token is concerned. But this is another governance type token, which is maybe has more of an actual governance component than most other DEX governance tokens. So they go on here until they talk about the DAI, decentralized governance, the voting mechanics, basically the debt ceiling, the fees, a bunch of other stuff as far as the voting is concerned for the protocol on a protocol level. And DAI at this point has pretty much been the accepted DeFi native stablecoin, along with USDC, along with Tether, obviously, ERC20 Tether. But DAI was definitely early on board the ERC20 train. It was, native for Ethereum. I don't expect it to necessarily migrate, but I don't know if they've said anything or talked about moving to other chains at all with the multi-collateral aspects of everything. I'm not really sure how that would work, if that would work in their favor or not. But lots of moving parts though with Maker, and you can go on their Twitter and just see all the votes that are happening all the time, and all of the decision-making processes that happen in regard to actually holding and voting on the token. If we look at the DAI Stats is the website it's called, you can see the debt ceiling. You can see the fees for everything, stability fees, how much of what is locked and where. You can see the types of collateral you can use. Really the big ones are BTC and ETH, as far as I'm concerned. Everything else is kind of takes a back seat to the big boys, if you will. Some other stable coins mixed in here. That's always interesting, using a stable coin to mint a stable coin. But at the bottom here, you can just see all of the coins that are involved in this. At the bottom here, they list some more relevant stats. We can talk about system surplus when it comes to the burning mechanic. I'll talk about that next. But the total supply is definitely important. That's voted on as far as the governance component again, and what's sort of tolerated by the market. They talked about raising it to 100 billion. I don't know what the exact the voting process for that, and or what the decision was, but that's in the works as well. So a lot of stuff going on with the token. If we look at the burning mechanic, really all that I really care about is what is the burning part, what is the aspect, how does it happen? So here they break it down for the Maker system to burn Maker, the token, a certain surplus buffer of 30 million DAI needs to be filled. The buffer is filled using fees from the vaults until a certain threshold is reached. Once full, fees are again used to burn Maker. So they can set out a predictable equation here to get a burn mechanic and show you that in 26 days, they're going to burn X amount of Maker. This is makerburn.com. And we can look at over time when those burns happened in the gold here in the yellow, and how they've been happening over time. And we can pop on price as well, and we can compare that. That's really the next interesting thing. Do the burns have any effect on price, right? And it looks as though there may be some correlation here with burns and price. It makes sense if you look at BNB. If you look at anything with the burning mechanic, sort of a buyback mechanic, it's a similar story. You'd expect some sort of price appreciation. So long as they aren't minting more tokens than they're burning, and there's a demand for the actual underlying token, you should see price appreciation. That's not a guarantee. It's just logic, I guess. If we look at the on-chain metrics for the token, we have the transaction count in the red, which have fallen way off since January. Average transaction values have increased substantially, along with both token price and ETH fees. So some of this was speculation related. Clearly, some of it based on organic DeFi demand type stuff. But so long as ETH fees are high, I'd expect anything with any governance related token where you don't need to necessarily move it all the time. I expect those transactions to be extremely low and the average transaction values to be very high. If we look at NVT, inverse metric of economic utility, and active addresses, and we zoom in a little bit, NVT is nearing all-time lows. So that says the market cap hasn't quite priced in the on-chain activity. Active addresses went way up and have decreased by around 50%. And we're seeing this with a lot of the governance tokens, all of which sort of exploded in January, February, March, and have sort of cooled off and are going sideways price-wise over the past few weeks. But all in all, I don't think this is a super bearish picture at all. You certainly want to see active addresses rising more so than falling. But seeing NVT sort of sit at relative lows for Maker should be bullish for Maker. You can't really compare NVT across a bunch of different chains because all the chains are different, so their NVTs are going to behave a little differently depending on the on-chain activity. But if you're bullish, you want to see NVT declining. And then it's also worth talking about just the explosion of DAI again since January. If you look at USDT on ETH, it's the same story in the red this time. Just an absolute explosion of ETH USDT since January, and DAI was no different. There's a big moment, big point in time when this clearly took off, and it's just a different animal. I mean, the Maker price also took off in January. Some of that is a DeFi effect, some of that is an actual organic utility effect, I think, where the market is waking up a little bit in the DeFi ecosystem. It's also interesting to look at the DAI USD chart, which to some people might think like, why is that even a thing? But when you're looking at the stability of a stablecoin versus the dollar, there are markets like USDT, USD, USDC, USD, where you, for the most part, have to trade this stuff. It isn't necessarily a one-to-one swap all the time. And looking at the volumes here, looking at the extreme wicks on some of this stuff, there was clearly a demand for DAI at a certain point in time. And the Maker people monitor this. Obviously, I think any stablecoin issuer monitors just what's going on with supply demand across the board, not just Coinbase in this case, but anywhere where this is traded, because stability for a stablecoin is like of the utmost importance, right? And there's a bunch of moving parts. And the idea with the multi-collateral stuff is to increase stability and have it not necessarily tied to ETH directly. If there's some massive liquidation based on a CDP because ETH had a massive drawdown or something. The idea from what I understand is that with a multi-collateral system, you'd have less of that baked into the protocol. So since January, the stability has been holding quite well, aside from a few massive wicks to the upside. But for the most part, it stays slightly above $1, so there's a slight premium. I think that's baked in from just the issuance fees and stability fees. You sort of expect, even with Tether, you expect to see a slight premium sort of all the time, I think, because of issuing. Issuing DAI isn't free, issuing USDT isn't free. That stuff costs money, so that's probably why this holds a premium more often than not. But there are plenty of people who just trade, stuff like this, and they arb the DAI pair, the DAI USD, USDT, USD, to a massive degree, right? You have to do this with hundreds of thousands of dollars or more effectively, right? Or just do it frequently, back and forth with a smaller stack. But there are definitely bots who trade that, or people who trade that for sure. Looking at Maker specifically on Bitfinex, which has the most data, I think, of all the pairs, it was probably listed on Bitfinex first. I'm looking at the 50 and the 200. It's been bullish since mid-2020. We've had a sort of a bear div play out and pull back. It's above the R5 yearly pivot. It was basically consolidating, between $400, $500 since it got listed. And then in January, everything exploded. The burning started happening to a greater degree, that sort of thing. The DAI ceiling got raised. All this stuff feeds on itself. So long as DeFi can maintain some sort of relevance and dominance and stay in the conversation, you expect stuff like Maker, DAI, any DeFi adjacent project to do fairly well. Not much VPVR, not much volume until sub 1,000. That's kind of expected. I mean, it's spent years in this zone, so relatively there's going to be very little volume up here. But as far as a pullback, I like 1,600. I like the 200 period moving average. I like the R3 yearly pivot. Those levels make sense to me. On the daily cloud, it's neutral. It's got a bearish TK cross. What you want to see is a bullish TK cross with price above cloud. So it's potentially setting up like a lot of these DeFi charts for a cup and handle type trade where you take a breakout long above the horizontal resistance, in this case somewhere around 2,500 is what it would look like. Over the next couple of weeks, this would be something to watch for. But it looks fine. Doesn't look bearish. Doesn't look like it's going to threaten a retracement or anything. It's already tested its long flat Kumo. I talked about this with ZRX earlier today, but ZRX has a similar chart where it hasn't tested this quite yet, this level equivalent on that chart. So I actually feel better about the bullish move here for Maker now that it has tested support. So neutral to bullish, definitely a wait and see though on the USD pair. Maker BTC, this isn't really a chart for me that I'd want to take a long trade on. It's got a ton of volume in this zone, and it's relatively thinly traded anyway on Bitfinex. 5,200 have crisscrossed a few times. I mean, just looking at this chart, it looks like a random walk, right? It goes all over the place. It mean reverts violently, overshoots that. Really, this probably just needs more time and more volume to figure out what it's going to be when it grows up. But I think everybody would be looking at 0.1 as far as psychological resistance. Any of these local highs would be resistance. But all in all, it's not really a great chart to really trade per se. It's more like a buy the low, sell the highs range trade sort of thing. If anything, it's potentially setting up for some sort of inverted head and shoulders type chart pattern with a neckline between 06 and 07. So that's your resistance level to watch. And then anything above that would be bullish continuation territory. Very similar to how it looked here, where you have multiple shoulders, the head, multiple shoulders. It breaks up and then it has its markup phase. That's definitely something I'd be watching. On the BTC pair, on the ETH pair, which is also traded on Bitfinex directly, again, probably not a lot of volume, probably more volume than the BTC pair, but it doesn't look bullish, right? It's below the daily 200, it's below the 50. It's got this potential Adam and Eve setup. It's like 2/4 of the way there. I don't know how to say that. 1/3 of the way there, I guess. The Adam left is there. You're waiting for the Eve. The long entry isn't until the Eve is formed. So really 1.6 would be the level to watch on the Maker ETH pair for me. Anything above that with a bullish 5,200 looks good for additional upside. So overall, Maker, love it or hate it, it's here to stay. It's not going anywhere. They're just getting bigger and bigger and bigger day after day. Stablecoins gaining relevance with Curve, with everything else going on as far as swaps are concerned. The burning mechanic looks as though it's going to be increasing and continuing. On-chain metrics for governance tokens in general are a bit iffy and really not super relevant to me. Governance tokens aren't meant to be transacted on-chain per se. So I think it's data worth monitoring, but not necessarily impactful to price. And the technicals for the USD pair are the best they've ever looked. It's just the BTC and ETH pairs look like you're better off holding BTC and ETH, at least for the time being, on those trend metrics. And then lastly, I'll just mention the Techme Capital Holistic ETH BTC Fund, where I trade ETH BTC versus USD. This is a non-custodial portfolio management tool on Enzyme.finance. There's a link in the video description if you're interested. You can see all the trades I make, how much, why, when. There's AUM listed here, depositors. It's completely transparent from that regard. Then the next week or so, we should have a DeFi portfolio as well that we're starting, and that'll be super exciting. They have lending and borrowing capabilities on Enzyme, so I'll be utilizing more of that on that portfolio than this portfolio specifically. So dislike, comment, share, subscribe. Let me know if you have any questions about anything mentioned in the video in the comments below. Get us to 10K subscribers, and happy trading.